So how much money do you need to invest in property? Well, the truth is you can get started with as little as £5,000 if you're doing the right strategy, but the amount of money that you have available to invest will obviously determine what you can and can't do with investment property, pretty obviously. And so in this video, I thought I could share with you a whole load of different property strategies and tell you which ones you can do depending on how much money you're going to be investing. And by the way, stay tuned until the end, because at the end I'm going to share with you the two core strategies that I think every new property investor should start with. Now, before we dive in, this is a really general list. There's going to be loads of sideways movement, and if you've been in property a while, you're going to note that options is not included in my list, and I'll explain why in a minute. So let's imagine you've got £5,000 to £20,000 to invest. What property strategies should you be focusing on? Well, one of the core ones has to be, in my opinion, deal sourcing and packaging. This is a great way to learn your trade really quickly, and it's a great way to start to build up your investment pot. But really importantly, I am sincerely hoping that if this is going to be a strategy that you're going to be following, you've got a day job. So you're not going to be spending the money when you're selling your packaged deals. You're going to be putting that into an account, and it's going to build up quickly, and you're going to be living off your day job. That's what I would love you to do. So we can start to build up that investment pot so you can then go and buy properties for yourself from that money. The next strategy is going to be rent to rent. Now, rent to rent is a great way to quickly replace your cash flow, so you can kind of get away from the day job quickly. And if you've got, say, £5,000 to £20,000, well, if each one you can do for maybe, and I'm going to really generalize here, say £5,000 each one with a rent-to-rent type strategy, you're going to be able to put together maybe 1 to 4 of rent-to-rent type properties. Rent-to-service accommodation is going to be another great one. Now, there's going to be more work involved in this, but that's going to go hand in hand with a greater cash flow too. But what if you've got a little bit more money? What if you've got, say, £20,000 to £50,000 that you can invest? Well, first of all, we're now getting into the single-let residential kind of category. So this is where you can potentially, in some parts of the country, buy a property by putting down your money as a deposit and giving a little bit to one side for refurb costs, and then you can buy that property and then let it out for the very long term to one family unit. Now, one of the big advantages to this is it's almost completely hands off. There's really nothing to it. It will put a modest amount of money, not a lot, in your pocket in each and every month. But absolutely crucially, you must be doing deals whereby you can put your money in and then you can recycle that cash back out again within, say, 6 to 12 months. So you can use that pot of cash to go and do the next deal. Next on my list is small flips. You have enough cash here so you can start to do 1 or 2 small flips on a regular basis to build up your investment pot. But again, you're going to be putting your money in, you're going to be adding value in some way, you're going to be flipping that property on and then building up your investment pot. We could maybe look at doing a mini-mo. Now, this is actually a little bit more advanced as a strategy, is where you're going to basically buy one property and you're going to be letting it out to a small number of separate unrelated tenants, maybe 2 to 4. Now, the truth is, one of my students actually does this just with 2-bedroom flats, and he's doing really well with it. He's doing really great from a cash flow standpoint. And there's one really big advantage to 2 bedrooms. It's the fact that it's not technically an HMO. So it doesn't need to comply with certain legislation. And it does really high class places, I emphasize, in London. Again, I emphasize. By the way, if you find this video helpful, it would be awesome if you could click that subscribe button and maybe click on the like as well. It really helps me as a channel, if that's okay with you. What about if you've got £50,000 to £100,000 to invest? What strategies should you then be looking at? Well, you're now into maybe the professional or student HMO camp. Now, these can really put big lumps of cash in your pocket, and they're a great way to build up a kind of cash flowing income that's going to replace your job really quickly. But in my opinion, your first property shouldn't be one of these. I don't think your first property should be an HMO, because regardless of what some trainers might say, there is more involved in HMOs. There's more legislation, there's more red tape, and so I don't think it should be your first investment property. What about holiday lets? Now, if you've got a place that you love, Why don't you look at getting a holiday let there? And obviously that's going to generate an income for you. But of course, you're also going to need to regularly go and visit that place, aren't you? Maybe just to check on this, that, and the other. Well, of course, that's a legitimate expense. It can all go through your business. But one really key thing with this, when you're looking at holiday lets, you have to treat it as a business. And by that, I mean you have to ensure that the properties that you're acquiring, you're able to fill the shoulder months. So that's in the run up to spring and it's in the back end of the autumn period. Because if you can't, then honestly, you're probably not going to be profitable. I always like to share Bristol as a really great example of holiday lets because honestly, you can let to holiday makers pretty much all year round in Bristol because there's just so much to do here. So that's really important. Make sure that you can fill the shoulder months. Larger flips are going to be on your radar as well. Again, these are going to enable you to really build up that investment pot quickly. I'd also like to add as the last one for this category, niche investments, niche property investments. Now, what do I mean by that? Well, you could look at maybe getting a garage block. In some parts of the country, certainly in Bristol or in London, you can get great income from garage blocks. Plus, there's the potential, of course, long term to get planning in there. What about storage or maybe land that you then go and get planning on? Or maybe parking? Or maybe you buy freeholds for buildings as well. There's lots of potential niche investments that you could consider. But what about if you're playing, at a higher level? What about if you've got 100 to say £300,000 to invest? Well, now we're looking at bigger types of deals, aren't we? Maybe you can get a large HMO, something really quite substantial. Now, these can be huge cash machines. They could put huge amounts of money in your pocket each and every month. As an example, one of mine, after all expenses, puts £4,000 a month in my pocket. That's after I've paid all the bills. You don't need many of them to replace your income. What about property developments? Certainly with this level of money, you can absolutely start to do one or two smaller property developments potentially each year. In fact, quick plug here, I just did a course called Hidden Developments. And in that course, I taught people exactly how to find amazing opportunities just from walking around their investment area. Although at the time of filming, it's not available, it's closed. But there are really great opportunities everywhere around where you look. Let's just leave it like that. Also, you're in the commercial camp now. You could certainly look at buying properties that you keep as commercial at some really fantastic prices at the time of filming. Or maybe you take on commercial and you convert it into residential. Now, please note in all of this list, I haven't included options. And the reason I haven't included options, if you're familiar with that, is that options, in my opinion, is not a strategy. Options is simply a way to control property. And you can use an option with any of the strategies that I've already shared with you. So I don't myself see it as an independent strategy. And I'm probably differ from some other trainers in that regard. So anyway, which two strategies do I think that you should be focusing on as a new property investor? Well, if you've got very little money, so you've maybe got £1,000, £2,000, £3,000, maybe a little above that to actually invest. Well, I think you absolutely should start with deal sourcing and packaging because it's a fantastic way to get really good at finding deals in your investment area. You can also make lumps of cash, little lumps of cash that you're going to be putting in your bank account. You're not going to be spending it. You need a job for that. Live off your job. Take those little lumps of cash and put it in your bank account and start to build up an investment pot over a period of time. Maybe invest in some ETFs or something like that. But that's what you should be doing, in my opinion. What about if you've got a little bit more money? And you're just starting out and this is your first investment. So you've got maybe £20,000 to £50,000 to invest, maybe a little bit more than that, but you're in that kind of camp. Well, I personally think your first deal should be a very straightforward vanilla type buy to let. So you're going to take the property on, you're going to do some refurb to it. If I'm being really honest, I think you should get in there and do a lot of the work yourself. Now, I know that goes against what you might have heard elsewhere. And maybe I'm coming with my kitchen fitter hat on, which is what I used to be back in the day. But the reason I think you should get in there and get your hands dirty is simply because you'll learn so much. You'll learn so much by kind of getting in there, even if it's just sweeping up after the main contractors have done the work. You'll learn so much, and that knowledge you can then bring to the next deal. But really, really importantly, you must be doing deals like this, where you can either buy them at a significant discount and then refinance 6 to 12 months later to get your initial investment back out again, or you're looking for places where you can add massive value. And I talk about this on my channel all the time. Massive value in such a way that you can do the deal, you can add the value, and again, pull that money back out again. So you can use that money to go and do the next deal. So there you go. There's my list. But have I missed out any strategies? If so, I would love it if you could comment below. It would really help me and my subscribers. I really hope you found this video helpful. And if you check on this one here, it will show you exactly what strategies and approach you should be taking for 2023. Thanks ever so much for watching, and I look forward to seeing you in the next one.